They say that the road to hell is paved with good intentions. And I say not depositing the payroll taxes that you withheld from your employees is the quickest way to get you there. I know you had every intention of making sure your company paid those payroll taxes, but life happened, and now the IRS is coming after you personally. They want you to pay the original tax plus a huge penalty called the trust fund recovery penalty. In this video, I'm going to explain exactly who can be held responsible for the penalty and who is not responsible. Can the IRS hit you with the trust fund recovery penalty? That's the topic of today's video on the other side of the break.
1-877 Levy King, Levy, Levy King, 1-877 Levy King, levyking.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877 Levy King, levyking.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan you want and not the one that they want, and how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, and enter your name and email, and I'll send you a copy right away. No charge, not even for shipping, totally free. Before we go any further with the video, please take a moment to subscribe to our channel, and don't forget to smash that like button for the YouTube algorithm and hit that notification bell so you get a heads up each and every time we drop a new video. Okay, guys, let's dive into today's content. In my last video, I defined the trust fund recovery penalty, and we learned that the penalty can be assessed against a reasonable person who willfully fails to pay over taxes that they withheld from their employees. If you haven't seen that video, I want you to pause this right now and go watch the first video before watching this one, because in this video, I'm going to define and discuss the definition of a reasonable person and what it means to willfully fail to pay over the taxes that are due. Now, who is a reasonable person, or actually a responsible person? A responsible person is one who had the duty to account for, collect, and or pay over the trust fund taxes. This is normally the owner, the corporate director, or company officer like a CEO or the CFO. But it can also be sort of a lower level employee as well. Basically, anyone with a requisite degree of responsibility can be held liable regardless of their actual job title. This includes a director who is not an officer of the company, as long as he or she was responsible for the corporation's failure to pay withholding taxes. According to IRS.gov, a responsible person is a person or a group of people who has the duty to perform and the power to direct the collecting, accounting, and paying of trust fund taxes. This person may be an officer or an employee of the corporation, could be a member of the employee or partnership, could be a corporate director or a shareholder. You could be a member of the board of directors or a trustee if it's a nonprofit. Could be another person with authority or control over funds to direct the disbursement of those funds. You could be a corporation or a third-party payer, or even a payroll service could potentially be responsible. Other entities like professional employer organizations have been responsible before, and other responsible parties within the common law definition have been held responsible as responsible parties for the TFRP. The point here is that you don't need to be the CEO or an owner of the business in order to be considered a responsible person when it comes to the TFRP. I've seen the IRS assess the penalty against bookkeepers or payroll clerks, even though they didn't have much authority within the business itself. I've also seen the TFRP assessed against spouses who were listed as corporate officers when their significant other formed the business years and years ago. This can happen when the spouse doesn't work in the business and has no idea of what's going on with the day-to-day finances. That person can still be held to be a responsible person pursuant to the rules that set up the TFRP, even though they don't actually have any involvement with the day-to-day activity of the business. It's also worth noting that a person doesn't have to be responsible for all of the functions of withholding and accounting for employment taxes. A person can be responsible for only one of the functions or one or the other and still be liable for the TFRP. So it wouldn't be a good excuse to say, well, my job was only to do the accounting, not the withholding, or my job was to do the withholding and not the accounting, or I was simply responsible for the paying over. I just wrote the checks, but I wasn't in charge of the withholding. Doesn't matter. You don't have to be responsible for all of the functions to be a responsible person under the TFRP. The next question is going to be, was it a willful act? Once the government determines that you are in fact a responsible person, they next have to prove that you acted willfully in failing to collect, account for, and pay over the payroll taxes. If they can't prove that you acted willfully, they won't be able to assess the civil penalty against you. In this context, willful means that you acted intentionally, deliberately, voluntarily, and knowingly. It doesn't mean that you had bad motives or evil intent. In other words, the IRS need to prove that they need to prove that there was an affirmative decision on your part not to pay the taxes. They only need to show that the responsible party was aware of the outstanding taxes and either intentionally disregarded the law or was plainly indifferent to their requirements under the law. A failure to investigate or to correct mismanagement after being notified of the withholding taxes having been paid satisfies that willfulness requirement. So in other words, if you've been notified that, hey, you're not doing the tax thing right, and you continue to do it wrong anyway, then they can consider that to be a willful failure to pay over the taxes as required under the law. A classic example of what is meant by willful conduct as it relates to the trust fund recovery penalty can be seen when a person is aware that he or she is required to deposit payroll taxes, but instead chooses to pay other creditors, such as landlords or lenders, instead of paying the IRS. Consider the case of Hochstein versus the United States. Hochstein was an employee of a large corporation, and he had the authority to pay suppliers, vendors, and company bills, including the company's payroll. He was found to have acted willfully when he paid the company employees, including himself, but he didn't pay the IRS. His argument was that he wasn't acting willfully because he was just doing what his boss told him to do. And number two, he was not given enough money to pay the employees' payroll and also pay the payroll taxes. The court ruled that his duty was to prorate the funds between the government and the employees. The court determined that his decision to pay wages and other supplies when he knew of the tax deficiency made his decision willful. Even though he was not an owner or company officer, Hochstein was personally liable for the company's tax debt under the TFRP. To summarize our video here, in order for the IRS to hit you with the trust fund recovery penalty, they've got to establish that you were a responsible person and that you acted willfully in your failure to withhold and deposit trust fund taxes. In my next video, I'm going to explain what to do when you learn that the IRS is coming after you for unpaid taxes, payroll taxes, and it intends to assess the TFRP against you. In a even later video, we'll discuss what to do once the TFRP has already been assessed and how to get rid of the tax once you owe it. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com, click the link below, follow the prompts, and answer a few simple questions. My team and I will reach out to you to help you figure out exactly what you qualify for in terms of getting a fresh start from the IRS. Again, that's www.levyking.com. Or you can give us a call, Number is 1877 Levy King. You see it right there. 1877 Levy King. All right, guys, that's it for this week. Talk to you later. Bye.
1877 Levy King. Levy Levy King. 1877 Levy King. LevyKing.com.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877 Levy King. LevyKing.com.
1877 Levy King. LevyKing.com.